Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on XLK, Apple, and Facebook. Clear bear breaks all around, big bear day, and what is notable is the bulls did not buy the dip. We don't have lower wicks on most of these candlesticks, which stands out because all of 2017 it has been marked by bulls buying the dip the vast majority of the time. So we took out a bunch of key clear supports today. The first bear break occurred when we broke the low of yesterday after the week open. 57.48 was that level. Another bear break at 57.25, another bear break at 57.10, and a last bear break at 56.79. So any one of those was a signal to go bearish. We had plenty of bearish signals on SPY before we got these signals, and we're really at the same time. But all these individual names, I keep highlighting the low of 2 Thursdays ago. SPY broke its low of 2 Thursdays ago much earlier than XLK did. So that was a clear bear signal that occurred earlier in the morning that gave a bit of a heads up. So we closed at the low of the day on increased bear volume. The next support we're looking down at from here, I'm looking at 56.62, and then we start to look at the gaps. There's a gap down here at 55.62 to be watching. That's a potential target. Hourly RSI is oversold. We're not just going to free fall down towards that level. We're going to see lower highs and lower lows, in my opinion, if that is what is going to take place. And because we have broken the higher lows on the daily time frame, I will anticipate lower highs and lower lows to form for a bit here. The weekly time frame is still just fine for the long-term bulls. So keep that in mind. It's all about perspective. The daily time frame is all bears right now, but the weekly time frame, no red flags. We would have to lose this low of 54.25 to break the uptrend on the weekly time frame. The middle Bollinger Band has held all of 2017. That level next week is going to be in the mid $55 range. So a couple key supports still in play on the weekly time frame, but we are potentially looking for a bearish TCG cross. We'll see how next week opens up. We've fended that off just barely back here in early July. It has not had a bear cross since back in last year, the end of last year. So that would be significant, but it hasn't happened yet. Looking at the individual names, Apple taking out 4 days of upside with this one bear day. Inside bar on the daily time frame, the bear break occurred at 158.49 as a bear signal. All out dump to the downside, increasing bear volume here as well. And we're now looking at this key support of 154.41. If we lose that level, we start filling the gap to the downside, which obviously there's a lack of support at those levels. So bears in full control of the short term. Key support of 154.41 potentially going to be tested tomorrow. And if that breaks, bears take over, or I should say bears follow through. This is the first red day that we've seen since the bulls saw their next leg to the upside after building a base of support. So that 154.41 level is very key. Weekly time frame rejecting from the upper Bollinger Band 2 weeks in a row. Bearish reversal inverted hammer is forming on the weekly, and we'll be looking to the middle Bollinger Band weekly support in the upper 147s if this weakness does continue, which is a ways to the downside at this point, but the weekly time frame certainly showing upper wicks of profit taking with the market weakness. Facebook, bear break of the equilibrium pattern. We had our high, low of the pullback, lower high, and a higher, or I shouldn't say a higher low, a lower low. 166.91 was the level. We only broke it by 6 cents, and we did hold the middle Bollinger Band, so it's not a very clear break at this point. If you put a support line right there, we are still right there holding it. There is a gap at 166.01 if we see downside continuation tomorrow. Bearish MACD cross, looking for the first bearish TCG cross in a while to follow through as well. So if we lose this middle Bollinger Band tomorrow, 166.01 gap fill is the short-term target. Weekly time frame, very healthy consolidation still. So even all this bearish action in the market, weekly time frame after 3 big bull weeks, this is a bull flag pattern, and we're holding exponential support on the weekly. There are no red flags for the long-term bulls at this point, and thanks to the cushion provided by the bulls in reaction to those earnings, that's why we can pull back significantly like we did today and still have it be just fine. We could pull back to 160 on this weekly time frame and still be just fine for the long-term bulls. So it's all about perspective and time frame. If you're a long-term trader, no red flags. If you're a short-term trader, the tech sector and the market overall has been giving some red flags today. So I appreciate you watching. We'll check back in over the weekend and see what kind of continuation we get. See you then.